From AAAFx, this is Chris taking a look at the upcoming week of January 8th in the financial markets. So this week's going to be the beginning of serious liquidity coming into the picture, although it's definitely backloaded, meaning that most of the information is coming out later in the week. On Monday, we'll get the CPI numbers month over month coming out of Switzerland. This is probably just going to move the Swiss franc, if it even does that. The Swiss National Bank has to be watching how the Swiss franc is behaving. It's gotten extraordinarily strong, and they don't like that typically. So the Swiss franc, although not a hotbed of activity at the moment, other than the fact that it continues to appreciate, could enter the headlines again. Tuesday, a complete lack of any red letter type announcement. So I think Tuesday is probably going to be a bit of a yawner. People will start to put on bigger positions throughout the week. Remember, the people who truly move the markets are typically going to have to scale into a position because they're so big that they can move the market against themselves if they do start to get overly aggressive in one direction or the other. The Wednesday session features the Australian CPI year over year. That obviously will have an effect on the Australian dollar and the Aussie 200. And then a little bit later on, we have the Bank of England Governor Bailey speaking. That could move the FTSE and the British pound. We'll just have to wait and see whether or not he says anything of interest that gets people really moving. Now, this is one that might be a little bit of a sleeper for the day, and that's the 10-year bond auction on Wednesday. And that's because bond rates certainly have a major influence on what happens with the US dollar, which of course has a major knock-on effect on pretty much everything else. So that will be worth paying attention to. That will be 6:01 p.m. GMT, so that is right around 1 o'clock New York time. We'll get those answers. 1:01, I guess. Thursday is going to be a very eventful day in the United States as we get CPI month over month, core CPI, and then year over year, at the same time as unemployment claims. Now, the jobs number this past week has really kind of been all over the place as far as its reaction on the market or in the market. So people will be paying attention to those unemployment claims. Quite frankly, Wall Street wants to see more unemployed people. CPI, of course, gives us a reading on inflation. Inflation's been the name of the game for a while now, and I don't see that changing. Right now, it's all about, will the Federal Reserve cut multiple times in 2024? And if they do, how many times? The Fed has suggested on their dot plot of like 3 cuts. The Fed fund futures are suggesting as many as 6. So clearly somebody's either lying or wrong. This type of data will continue to kind of try to bridge that gap, hopefully. Friday, we start off with CPI in China, which of course is becoming increasingly important, but they are starting to see deflationary numbers in China. So it'll be interesting to see how that plays out. I think ultimately this might be a non-event, but unless of course it's shocking. GDP coming out of the UK month over month, obviously will move the FTSE and the British pound. And then later in the day, we get core PPI and PPI month over month out of America, obviously having an influence on stock indices in the US. However, late enough in the week that probably you'll get a short-term reaction and then the markets will calm down as traders focus on going home for the weekend. Unless, again, of course, it is some type of massive shock. If we see PPI rise more than expected, that could be good for the US dollar. We'll just have to wait and see how that plays out. Strong US dollar typically will work against the value of stocks, so that's something worth paying attention to as well. With that, we begin to focus on the charts. I'll bring it down here. And the euro, as you can see during the week, has fallen quite a bit, showing signs of that hesitation after the shooting star that suggested that maybe we could see I still think you're probably going to be looking at a range possibly for the entirety of the year. I think 112 and a half and right around 105 are your outer bounds. We are roughly in the middle of it, so anything's possible. But take a look at the daily candlestick on Friday. Shot towards that crucial 110 level, pulled back. The 50-day EMA has offered support, pulled back. And here we are, unchanged. So what does that tell you? It really doesn't tell you anything. I think we'll have to wait and see how the next weekly candlestick plays out. Gold telling you that there are buyers on dips. And, of course, gold, as per usual, looks very much like the euro. You can see we did the same thing. And so what does that tell you? It tells you it's all about the US dollar. It isn't always in the gold market, but it most certainly seems to be now. Geopolitical issues could, of course, drive money into the greenback, and that also simultaneously could drive money into the gold market. So both can go up at the same time. And in fact, we spent the better part of the 80s doing that. Short-term pullbacks, I think, continue to see support below, especially near the $2,000 level. The shape of the candlestick does suggest that we will have more of a buy on the dip mentality. Taking out the $2,075 level to the upside opens up the possibility of a bigger move higher. But right now, I think you have to look at this through the prism of a market that's trying to work off some froth and determine whether or not it's got enough momentum to continue going higher. Silver, I think, is going to be a lot like what I showed in the euro. I think we're going to have a range for the year. It may go a little deeper. It may go closer to 20 and 26, $6 range. That's a pretty good range for silver for the year. We're basically in the middle. So pretty ambivalent and neutral about this market. You start getting towards the extremes, you can buy or sell. But right now, I think it's just too choppy to deal with. You can see silver shot straight up in the air during the day and then gave back quite a few of the gains during the day. Bitcoin really didn't do anything for the week if you just looked at the closing price. That being said, we did fall to test the 40,000 level. And as I go to the daily chart, you can see just how vicious that Wednesday candlestick was. The thing, though, that has proven to be true is that buyers are here and they're going to be involved. If we can take out the top of the candlestick, then it opens up a move to 47,500. I don't see anything on this chart that suggests we can't get there. But what I do think we have at the moment is a bit of a holding pattern. And why wouldn't we? After shooting straight up in the air, you have to work off some of that excess. Furthermore, people are waiting to see if there is that ETF that's coming out. Is it going to be approved? Is it going to be released? If it isn't, if the Bitcoin ETF is not approved, Bitcoin's going to get punched right in the face. So you have to be very cautious with that. If it is released, don't be surprised at all to see a sell the news type of event. And in that scenario, I think you will have a great buying opportunity at lower levels. 40,000 offers support, so does the 35,000 level after that. Ethereum, very much the same idea. We dipped below 2,100 to get close to testing we did test the 2,000 level and then turned around. A lot of traders continue to look at this as a potential way to play a lot of the crypto space for 2024. You can see that I have an ascending triangle here. The measured move reaches up to just right around there. So 3,400 or so. At this point in time, I don't see any reason why we don't get there, but that doesn't necessarily mean we have to get there right now. This is a market that is going to spend a lot of time dipping and attracting more capital. And I think that's just the way you play it. You just don't get overly exposed on any one moment. Dollar yen, really interesting candlestick for the Friday session. It is a shooting star right here at the 145 level. So a pullback could be expected. But when I look at the weekly candlestick, that screams that there are actual buyers here. Remember, the Bank of Japan just is completely feckless. It has no way to tighten rates. And I think that's going to continue to punish the yen. Now, That doesn't necessarily mean we have to go straight up in the air, but I do think that at this point you have to look at pullbacks as a potential buying opportunity, at least until we break down below 140 yen. If we break below 140 yen, then obviously that's a very negative turn of events. But right now, it looks like we're putting up a pretty significant fight, and therefore, I think that the Bank of Japan not being able to tighten or at least normalize monetary policy is going to continue to see the Japanese yen just get smoked against most currencies. This will be especially true if there's a sudden run to the dollar. Right now, you may have more traction in other currencies such as the New Zealand dollar or maybe the British pound against the yen. But at this point in time, I think in general, yen weakness looks like it's coming back. The Australian dollar has spent most of the week falling, but the Friday candlestick showed a little bit of hope for the bulls. As I click over to the daily candlestick, you can see that, or daily time frame, you can see that Friday initially was pretty ugly, but then we turned right back around to show signs of life. With that in mind, let's go ahead and put the Fibonacci retracement on the chart. You can see that we were right here at 61.8. So I do think that technical traders might be interested in this. The weekly candlestick does show that we're right in between the major support and resistance level, support being 0.65 and resistance being 0.69. As we're at 0.67, basically, we're about 13 pips above it as I record this, or 14 pips. This is very neutral. I think we probably spend a little bit of time in the short term trying to rally, but whether or not we can break out, that's a completely different question. If we could break 0.69 and 0.70, then the Aussie could really start to take off. Crude oil markets initially pulled back during the week, but have recovered to close near the $74 level. When I look over here in the daily time frame of the U.S. oil market, you can see clearly $75 is an area that you will be paying attention to, especially with the 50-day EMA in the picture. Short-term pullback, very possible, very likely, but I think 68 to 50 or 68 to 65 is a massive support barrier, especially when you look at the weekly chart. You can see exactly what I'm looking at. If we can break above the weekly candlestick from the previous week, which at this point is $76.23, then we could really start to see this thing take off a little bit. Brent, very much the same situation and for the same reasons. A lot of people were out there waiting for the Federal Reserve to liquefy the markets, meaning keep monetary policy loose and make it looser. And therefore, the idea is that industry and business will boom again. It's a boom-bust cycle. Brent is approaching that $80.50 region that I've been talking about. Probably going to pull back. $72 to $70 underneath is a major support level. If we can break last week's high, then we might go looking towards the $90 level via the $85 level first. Over here in the S&P 500, we did have a pretty significant break later in the day. It looked like we were trying to hang on to 4,700, but we did shrink just below it. Now, I don't know how broken I would call this, but the reality is that things don't look hot. Even if we do rally from here and recapture 4,700 in the last few minutes, it's still not a very strong looking market. Does look like it's somewhat supported, but I think ultimately we do need to pull back a bit, maybe look towards 4,600. If we can hang on to that, then I think we make a run towards 4,800. Breaking 4,800 is very bullish to say the least. The US dollar has rallied against the Canadian dollar during the bulk of the week. And of course, on Friday, we've been all over the place. Not a huge surprise considering jobs number coming out of both countries at the same time on Friday. So why wouldn't it be noisy? It looks like we're at the bottom of an overall range, trying to bounce. 1.35 could very well be your target. Short-term pullbacks should end up being buying opportunities, but we'll have to wait and see. If we break down below the 200-week EMA, then 1.31 is a major support level. The US dollar against the Swiss franc has been pretty bullish during the week, but the Friday candlestick, right along with the Wednesday candlestick leaves a bit of doubt. So while I did mention that the Swiss are probably losing their sense of humor with a strong franc, I don't know that I'm willing to jump in and start buying yet. If we can break above the highs of the week, then maybe it's worth a small position. But right now, you can definitely see that we are in an area that has invited either outright manipulation slash intervention of the Swiss National Bank, or stealth, because they've also been known to do it stealthily. A lot of times traders find out after the fact that they in fact were in the markets buying. We're definitely in this pocket here between 87 and 80 that could invite some Swiss National Bank actions. But as things stand right now, they haven't really rattled the markets too much with anything. So this is one to watch, not necessarily one to trade. The DAX initially took off during the week, has pulled back, and now found support here right around 16,500. So it's going to be interesting. Can we hang on to this? I think at this point, you have to look at this through the prism of, what ifs. So if we do hang on to 16,500, all that means is we probably form some type of flag. It does suggest that's the most likely of routes, at least looking at the chart right now. It doesn't mean that it's going to be easy, and I do believe that the 17,000 level above is going to be difficult to crack. However, if we break down below the bottom of this candlestick, 16,000 is probably your next stop, followed by 15,500 euros. The FTSE 100 has pulled back from the 7,800 level during the week, and I think at this point, we're just consolidating. I don't know that we have anywhere to be right now, so I remain pretty neutral. In the FTSE 100, recognizing that 7,800 is resistance, 7,230 underneath is significant support. The Dow Jones 30 continues to look extraordinarily elevated, but this is the first negative week in 1, 2, 3, I guess technically that one is 9 candlesticks. There's only been 2 negative ones, and that one has been somewhat unchanged. So this is a market that's overdone. There's absolutely no ifs, ands, or buts about it. I really kind of want to see the 36,500 level tested, but I also recognize that the 37,050 level could offer support as well. And then we could even drop all the way down to 3,600, which is a nice large round number in an area that we've seen a little bit of action in the past. The Dow Jones 30 selling off is something that you should be welcoming, and you should look at it as an opportunity. British pound US dollar weekly chart shows that we have in fact fallen a bit, but then turned around to show signs of life. The 1.2750 level above continues to be an area of significant resistance, so I don't know that we have anywhere to be quite yet. If we can break above the highs of the previous week, then I think the British pound goes looking to the 1.31 region. On the other hand, if we break down below the lows of the week, then we'll test 1.25, where I anticipate there will be a significant amount of support. The daily chart shows how back and forth we've been over the last couple of days. And the Friday candlestick, well, I mean, it didn't really tell us a lot, other than there are definitely people willing to step in and buy on dips, which of course is something that we already knew. Nikkei 225 continues to just frustrate traders really in both directions. I think at this point, I'm going to draw a line at 34,000. And if it can break it, great. It's time to get long. Otherwise, it's just killing time, a lot like the FTSE is at the moment. It does look technically bullish, but right now it just doesn't have the get up and go that you want to see. The NASDAQ 100 got hammered during the week. It's been nothing but selling. Friday closing out slightly negative. It does look like they're trying to step in and perhaps support the market. We did rally at one point during the session after the ISM number came out weaker than anticipated. Remember, Wall Street wants a weak economy because that means cheap money. But having said that, it looks like the daily chart is going to close slightly negative or right around unchanged. 50-day EMA is down here right around the 16,000 level. So I think it all kind of ties together quite nicely. I'd be interested in buying it down there. Right here at 15,750 is also an area. But this candlestick, pretty ugly candlestick, so one would think that we'll get a little follow through to the downside. And quite frankly, that might be a good thing considering it's been 7 stocks that have been pushing the stock market around in general. British pound, Swiss franc. This is going to be like the dollar franc, although, the pound has definitely shown some signs of strength. If we can clear this 109 level, that could send this market higher. Right now, though, it's a nice recovery, but I don't know that much has changed other than we've hit a pretty significant low or at least close to it. Dollar MEX, we initially tried to rally, but the peso is starting to strengthen. That's an interest rate differential play. Keep in mind that the Bank of Mexico keeps interest rates much higher. 16.62 is a major support level. So if we break that, we have much further to go. And that's a good play on emerging market currencies such as the South African rand and everything else, the Brazilian real. They all tend to move in the same direction. I do think that this next week is going to be interesting because the liquidity is going to pick up and people will have to pay attention to that. We may get a couple of head fakes along the way, but by the end of the week, hopefully we'll have discernible trends in almost everything we follow. Typically, that's how January plays out.
AAAFx, AAAFx.